Stocks edging higher Wednesday on Wall Street as the Reddit revolution is starting to show signs of losing steam. Let's find out what Wall Street will be focusing on next. We're joined by Aaron Kennon. He's CEO of Clear Harbor Asset Management. Good afternoon to you, Aaron.
Good afternoon, Fred.
And Aaron, GameStop, AMC, those hot stocks, they were rallying earlier, but in a very limited range. Right now, they're up about 20%, but certainly not what they were just a few days ago or a week ago. So that rally seems to be losing steam. What should investors be focusing on right now?
Well, Fred, I think what we're starting to see is sort of a refocus on some of the traditional themes that have been around for at least the last several months. And that is, of course, earnings being perhaps top of the docket right now. We're in the middle of earnings season here in the United States. Looks like earnings are generally well positioned, incrementally ahead of expectations, top and bottom line relative to estimates. And I think investors are also focused on what's happening in Washington, D.C. The fiscal stimulus package looks like it's going to pass at a larger level, not a smaller level, now that the Senate has agreed to the reconciliation process. And then, of course, the monetary side. I think the investors are still recognizing the sort of concept of don't fight the Fed right now. And the Fed is buying about 120 billion worth of treasuries and mortgages every month. And so there's quite a bit of monetary and fiscal stimulus rolling through the pipeline.
Okay, so you just went through earnings, fiscal, and monetary. Given those three, are you optimistic about the direction for the market ahead? And if so, where should investors be putting their money?
Well, it's a great question. I think it's on everyone's mind. The estimates for earnings this year among the average analysts is that we'll see something like 25% earnings growth, and that should augur higher equity valuations. However, multiples on equities are certainly at the upper sort of quartile of what we've seen over the last 25 years. And so there's sort of a show me story, I think, that needs to occur in the market, which is, I think, we need to see the data in order to sort of recognize that these numbers are actually going to come to reality. But we're hopeful that there is a real reflation going on in the economy, and that in a post-COVID world, assuming that this vaccine continues to remain efficacious, which we're hopeful that it will, that we'll see nice growth, particularly in the back half of the year. And we think that bodes well for the cyclical parts of the economy, particularly industrials, materials, and energy, which are already having a reasonable start to the year, but also the banking sector, where we may see the services part of the economy start to accelerate again. It's one of the areas that obviously was under significant pressure in 2020.
Well, Aaron, a lot of talk has been about the rotation from growth to value stocks to cyclical stocks. But we saw a tech report yesterday in the tech titans in the form of Amazon and Alphabet coming out with strong earnings. To what extent should investors be shifting their assets over to the cyclical side, the value side, as you point out, allocation-wise?
We think a broad sort of core allocation to both components of the market is prudent, frankly, over the long term. Where we probably would have a little bit of reticence, even though we like the mega cap tech and mega cap discretionary names like Amazon, we also believe that being massively sort of overweight those relative to all the other market opportunities and sector opportunities may just not be the most prudent thing at the moment. Those top 5, 6, 7 names now make up about 25% of the overall S&P 500. This is a rate of weighting that we haven't seen since the dot-com bubble. So, to be able to underweight perhaps some of those mega cap names and have a more broadly exposed portfolio may be a prudent course for this year.
Thanks a lot, Aaron. Our thanks to Aaron Kennon of Clear Harbor Asset Management. I'm Fred Katayama in New York. This is Reuters.